The number of active listings in Toronto's real estate market has doubled since July 2023. And in July 2024, we saw that lead to a drop in the average sale price of a Toronto home because it allowed buyers a varied amount of choice and the ability to negotiate a lower purchase price for their property. In addition to that, even after 2 consistent interest rate cuts, we haven't seen a significant change to the Toronto market, which tells us that the buyer demand hasn't quite returned yet. Hey everyone, it's Jay here from Vertex Real Estate, your GTA Realtor, bringing you the market update for July 2024. So let's dive in and look at what the numbers tell us. So here's a market report published by the Toronto Regional Real Estate Board for the month of July. And a couple of key figures I want to bring your attention to is the MLS sales activity year over year from July 2023 to July 2024, and the average price between the same period. So as we can see, the number of sales went up from 5,220 in July 2023 up to 5,391 in July 2024. However, while the sales went up, we saw the average price dip down slightly from 1,116,950 to 1,106,617 over the same time period. Now, I'm going to go over a little bit about why this could be happening later in the video, so stick around for that. But one of the key takeaways from this report was the TREB president's message, where she said it was encouraging to see an uptick in July sales relative to last year. We may be starting to see a positive impact from the 2 Bank of Canada rate cuts announced in June and July. Additionally, the cost of borrowing is anticipated to decline further in the coming months. Expect sales to accelerate as buyers benefit from lower monthly mortgage payments, said TREB President Jennifer Pierce. Now, this is actually where I disagree a little bit with the TREB president. I know it's a bold statement to make, but the reason I disagree is the part where she says we might be seeing a positive impact from the 2 Bank of Canada rate cuts announced in June and July. From the June rate cut, yes, we could see some impacts because there has been enough time for that cut to have its effect. So the June rate cut happened in early June, whereas the July rate cut happened on July 24th. So we haven't seen that kind of change. We haven't seen enough time pass since the July rate cut to when the report was published for July 31st. About a week is too short to find out what kind of effect that rate cut would have had. And in my last video, I talked about how the June rate cut just wasn't enough to convince buyers and bring up that buyer confidence for buyers to jump into the market. By the end of this month, we might see some more. We might have had more time to see an effect from the July rate cut, but right now it's just too soon to say. We are also anticipating another rate cut in early September, and there are talks about that being a 50 basis point rate cut. And if that does happen, that's going to be a substantial amount, totaling to 1% rate cut from when they started cutting rates in June, and that might increase the buyer confidence, and we could see an additional influx of buyers, especially combined with the fact that it's the fall market, which we do typically see more activity in. But time will tell about that. In addition, we've also seen that on a seasonally adjusted basis, July sales and new listings edge lower compared to June. And so goes to support my statement about how we haven't seen that kind of effect happen from the July rate cut, especially if the sales and new listings are going down from June 2024. I also want to go over the number of sales by price range and property type, so we get an idea of what the most popular products are in the Toronto market and what price people are paying for these properties. So we can see that 45.4% of all total sales happened in the detached category at an average price of around $1.426 million. And that tells us that the detached product continues to be the most popular, as I mentioned in my last video. But along with that, we can also see that as far as price range goes, this amount here is just around 44% of all total sales out of 5,391 happening in the $1 million plus range. So that tells us that the most popular product is the detached product, and people are willing to pay that premium price over $1 million to purchase that home. And while on a short-term scale, we are seeing some uncertainty in the market, and buyers are still not that confident. If we look at the numbers, we can see that people are, paying the more premium price, paying for that more premium product on average. Now let's look at the TREB housing market chart for the month of July, so we get an idea of what the trends are looking like for each of the key figures. Starting with the number of sales. you can see that they're up year over year very slightly over here. But if we look at the average trend, seasonally speaking, then you can see that it's going down. So this is May 2024, June 2024, and then July 2024. So we can see that downward trend here. However, if we talk about why we're seeing that slight increase year over year from July 2023 to July 2024, it could be because we are seeing a significant change in the inventory, which is up 18% year over year, which would allow buyers to have that very choice and therefore increase the sales slightly. Moving on to the new listings, we can see that we're up significantly year over year from July 2023 to July 2024. However, seasonally, we are looking at a downward trend this way. The reason for that, I would say, is because after the June rate cut happened, as I mentioned in the last video, a lot of sellers had that expectation, that hope that buyers would flood the market, and that's why listings went up. However, after that month and throughout July, once sellers started seeing that effect isn't being seen in the market, where buyers are coming in and price isn't, they're not getting these extravagant prices, sellers perhaps decided to hold off and wait to list their property before we see that kind of demand coming back. However, year over year, we're still seeing a significantly upward trend, as we can see over here. Now, the sales to new listings ratio is, as expected, going down. The demand is not quite there, and we can see that both year over year and seasonally, the trend is trending downwards. So seasonally, we can see it's going down this way from the orange bar over May, June, July going down, and year over year, it's going down this way. Now, that's not unexpected, because as I've been mentioning, that buyer demand just isn't there. The interest rates still feel high. That second rate cut in July was just too late for us to see any effect. A week of the rate cut is just not enough time for us to see any kind of significant effect from it. And people are still going by that initial June rate cut, because throughout the month of July, for the first 3 weeks, we were looking at just that 0.25% reduction that happened in early June. So demand isn't there, and that's what this represents right here. Now, the average price is trending downwards as well. So if we look at both seasonal and year-over-year numbers, we're seeing a downward trend. If we look at the year-over-year numbers, it's this small dip right here. And if we look at the seasonal trend, it's from this orange bar from May to July trending downwards like this. So that correlates directly to the sales to new listings ratio, which I was just talking about, because the sales to new listings ratio, if it's a representation of the demand, then the price would correlate with the demand, because as demand goes down, so should price. And there's another chart that shows both these two, the relationship between these two in one visual representation, which I will show you next. So now here is the relationship between the sales to new listings ratio and average annual price growth. So how this graph works is that this chart plots the monthly sales to new listings ratio, which is the blue line, with a year-over-year average annual percent price change, which is the yellow line. So when we see the sales to new listings ratio move higher, the average annual percent price change also generally trends higher. And when the sales to new listings ratio moves lower, we see that annual price change, percent price change trend lower as well. So that just tells us that as demand goes up, price generally goes up, and as demand goes down, price generally goes down as well, which is what we're seeing in the past few months from May to July of this year. And we're seeing year over year from July 2023 to July 2024 as well. So having looked at some of the key figures for the month of July, let's look at what the future holds for the Toronto market. As more buyers take advantage of more affordable mortgage payments in the months ahead, they will benefit from the substantial buildup in inventory. This will initially keep home prices relatively flat. However, as inventory is absorbed, market conditions will tighten in the absence of a large-scale increase in home completions, ultimately leading to a resumption of price growth, said TREB Chief Market Analyst Jason Mercer. Now, this is something I completely agree with, because what he's saying here is that right now we have a large buildup in inventory, and the demand is not quite there because of the rate hikes that have been happening over the past couple of years. But as those rate cuts start to happen, as we've seen in the past two announcements, the monthly mortgage payments are going to become more affordable for buyers. And as that happens, the buyers will come in and pick up some of that existing inventory. Initially, this will leave the prices flat, because there just is so much inventory in the market that buyers will be able to negotiate the best price for themselves. And we might see a hike or a dip in prices here and there, but relatively they will stay flat. But once that inventory starts to get picked up and buyers continue to come to the market, we're going to see that that large-scale increase in home completions isn't there, and that means that the supply is going to go down while the buyer demand goes up, especially because we've been seeing an increase in population growth due to things like immigration, and we're going to see an increase in demand and a reduction in supply, which will likely lead to a resumption in price growth that we've been seeing over the past few years. Finally, let's look at what the TREB CEO has to say about city activities affecting the Toronto regional market. Innovation in new home construction must continue. TREB applauds Toronto City Council's decision to consult with the province on adopting single egress stair requirements in the building code for multi-residential buildings up to 4 stories. This would make it easier to create a variety of multifamily units large enough for families. Now, we know that housing demand within the city is very high, and that's especially the case for units large enough to house families. So if the Toronto City Council is implementing measures within the building code that allows for such units to be built, we know that that will help both renters as well as buyers. Another important part of the housing formula is connection to public transit. We are very encouraged to hear that we're closer to an opening date for the Crosstown LRT and are looking forward to a firm announcement, said TREB CEO John D. McKelly. Now, we know that the Eglinton Crosstown LRT has been delayed quite a bit, and we still don't have a firm date on when completion will happen. So obviously this has led to a lot of frustration, and I totally understand that, but it's just one of those things that we're going to have to wait for the completion date to be announced and hope that completion actually does happen on that date, and hope that it affects the market positively. Now, of course, if you have a property and properties in general that are close to the LRT, we can expect the prices, the home values to go up, because connectivity to public transit and accessibility to public transit is one of the key drivers of home value. So that concludes my overview of the market report for the month of July. As I've been saying, there's quite a few interesting things going on in the market right now. The August month tends to be a little bit more quiet as people take the last few months of the summer off before the back to school season kicks in. But September is also when the fall market starts to kick in, which is when we see a little bit more activity. And also in early September is the next interest rate announcement, which is when there may be a potential 50 basis point rate cut. So let's see how the August market pans out. I will keep you posted on the market and different things going on. So make sure you subscribe to stay in the loop, and look forward to the next video.